Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to have you here as we dive into the latest action on Wall Street. It's been a roller coaster of a day in the markets with plenty to unpack, from tech sector turbulence to standout performers and some critical economic updates. So, grab your coffee and let's break down what matters most for us long-term investors while keeping an eye on those short-term swings. First up, let's talk about the major indexes because they set the tone for the day. The Nasdaq took a significant hit, dropping over 1% as tech stocks faced heavy selling pressure. Meanwhile, the S&P 500 also slipped, down about 0.5%, reflecting broader market unease. On the flip side, the Dow managed to eke out a tiny gain, barely staying in the green, while the Russell 2000 showed some resilience with a modest uptick. Volatility is definitely in the air, with the VIX spiking nearly 4%, signaling investor nerves. For us long-term players, these dips might spell opportunity, but it's a reminder to stay diversified and not get too caught up in daily noise. Zooming in on individual movers, let's check out the large-cap losers dragging the market down. NVIDIA, a heavyweight in the AI chip space, stumbled with a notable decline after its latest earnings report. Despite strong results, investor expectations were sky-high, and some are worried about a potential slowdown in AI spending. Other tech names like Applied Materials and Corning also saw sharp drops, reflecting broader concerns about AI disruption in the sector. For us, this could be a moment to watch. Tech valuations have been stretched, and pullbacks might offer entry points if fundamentals hold. On the brighter side, some large caps bucked the trend with impressive gains. Shopify and Spotify led the charge, both posting strong upward moves, fueled by robust growth expectations in e-commerce and streaming. AppLovin and CrowdStrike also caught attention with solid gains, showing that not all tech is under pressure. These winners highlight pockets of strength, and for long-term investors, they're a reminder to focus on companies with durable growth stories, even amidst sector-wide challenges. Looking at the market movers, NVIDIA again grabs headlines as one of the most active stocks, though it's down on the day. Tesla and Amazon also saw heavy trading with slight declines, reflecting mixed sentiment in big tech. On the upside, Netflix and Palantir ticked higher, showing investor interest in streaming and data analytics plays. These names often drive market direction, so keeping tabs on their momentum is key, even if we're not chasing daily trades. Speaking of activity, the most traded stocks today paint a similar picture. NVIDIA tops the volume charts, no surprise there, alongside Intel and Netflix. Smaller names like SoFi and IonQ also saw huge trading action, hinting at speculative interest in fintech and quantum computing. High volume often signals where the action is, but for us long-term folks, it's more about the underlying story than the day-to-day buzz. Now, let's touch on some broader economic news shaping the landscape. Electricity prices are soaring nationwide, up over 6%, outpacing inflation and squeezing household budgets. This could weigh on consumer spending, something to watch as it impacts retail and discretionary sectors we might hold. Also, there's chatter about rising copper inventories and a potential slowdown in AI capital spending, which could cool off some commodity and tech plays in the near term. For our long-term strategy, these macro trends remind us to balance cyclical exposure with defensive holdings. Shifting gears to earnings, it's a busy week with plenty of heavy hitters reporting. Companies like NVIDIA have already dropped their numbers, with results sparking big reactions despite a beat. Expectations were just that high. Salesforce, Dell, and Autodesk are also on deck, and their updates could sway tech sentiment further. Smucker and Sempra beat estimates, showing strength in consumer goods and utilities, respectively, while Krispy Kreme delivered a sweet surprise with profits topping forecasts. These reports give us critical insight into sector health, and for us long-term investors, they're a chance to assess whether our holdings are delivering sustainable growth. You can find exclusive earnings transcript summaries on MarketSnap for a deeper dive into these results. Before we wrap up, let's highlight some standout performers over the past week. Garmin surged over 20%, riding a wave of strong results, while Lumentum and AppLovin also posted double-digit gains, showing momentum in tech niches. Shopify and Occidental Petroleum round out the top gainers, reflecting diverse strength. These weekly movers can signal emerging trends, and while we're not jumping in on short-term pops, they're worth noting for potential watch list additions. On the flip side, the past week wasn't kind to everyone. Genuine Parts took a massive hit, down over 20%, while Rivian and Blue Owl Capital also saw steep declines, reflecting challenges in automotive and financials. Atlassian and Flutter Entertainment round out the losers, hit by sector-specific pressures. For us, these drops might flag undervalued opportunities if the fundamentals align with our long-term thesis. Lastly, a quick look at sector performance over the week. Industrials led the pack with a solid gain, followed by consumer cyclicals showing decent strength. Energy also posted a notable jump, up over 4% week-on-week, likely tied to geopolitical tensions. These sector moves can guide our allocation strategy, ensuring we're not overly exposed to lagging areas. On the weaker side, healthcare slipped into the red, alongside utilities and financials showing slight declines. These underperformers might face near-term headwinds, but for long-term investors like us, they could represent contrarian plays if the valuations get attractive. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate the markets with confidence. Be sure to stay engaged with our daily summaries and dive into our SWOT analyses for deeper insights on your favorite stocks. Until tomorrow, keep investing smart.